We have with us the senior management of the company. Leading from the front is Mr. Ali Jamil, the Chief Executive Officer of TPLP, Mr. Ali Asgar, who is the CEO of TPL REIT Management Company, and Mr. Adnan Khanwala, who's the Chief Financial Officer for TPL Properties Limited. I'll give the floor to Mr. Ali Jamil, who can start the presentation, and then the other management can follow up.
Thank you. Thank you very much. I'm assuming everyone can hear me.
Ji, sir, you're audible.
I can control this, right? All right. Somehow it's not.
Right?
Okay. Some of you, I'm sure all of you are aware of this. I will not go too much into it. The only change since we last spoke is one, where TME is now 50.1% owned by a company called Gargash, which is in the automobile and other businesses.
Yeah.
This is sorry, gentlemen, it's ladies, it's just a distraction. People are entering, so I'm just trying to navigate this and also let you know enter. Right. Okay, so these were the three businesses, so three SPVs we have. One is One Hoshang, the other is Technology Park, and the third is Mangrove. We will go into all of these in more detail. Next. Is that working? This is not working.
This should work, right? Both of these.
Right, apologies for that. So we have 5 different segments we're in. One is, of course, the real estate owner. One is the developer. One is the REIT manager. One is the offshore fund manager. And third is the property manager. So we started essentially as a real estate owner when we started the business. Then we morphed into property manager and then into the other businesses which you see here. We launched Pakistan's first hybrid development impact REIT, and that was TPL REIT Fund. We launched that several years ago, and we listed in 2000. It listed earlier this year in May of this year. Since then, when we started the business, it was 10 rupees at financial close, and then last NAV, which was about 17.9 rupees. The market price is, as all of you know, is below that. One Hoshang, some of you may have seen it. It's very difficult to miss. It's right down the road from the Marriott. It's on the right. When you go down and you enter Clifton Bridge, it falls to the right. It's probably the most high-end apartment in the country. Its height is about 435 feet. There are 2 retail spaces on the ground floor. And what the distinguishing feature of this project is that this is one apartment per floor, which is unprecedented and for the first time in Pakistan. The design team is an international team who have led the best projects across the world in Europe, the US, and of course, Asia. Objective was to apologies, I'm a Mac user, so just go back and slides. Right. Objective was to, of course, preserve the cultural heritage. Right now, we're working on the heritage, and we hope to unveil the heritage going forward in the next 2 months. We're looking at a dividend and completion in the year 2026. This is just snapshots of the work which is going on over there. We're on the third floor. We've done the 2 basements. It took us longer than usual because the challenge here was to, of course, the heritage wall had to be raised, so we had to add braces there. The site, as you can see, is a tight site. Traffic is an issue, so we are very constrained on the timings during which we can work, and hence it's not really all visible what all we're doing. But I can assure you there's lots happening behind the wonderful curtain wall that you can see, which is, of course, again, a first in Pakistan. This is Technology Park. Some of you may have seen this. Well, you haven't seen this, but you may have seen the design earlier on. So the plan now is that we are going to be relocating the Technology Park into the mangroves development, which I'll speak of a bit later. We're looking to exit from this by selling the land, and the cash realization on this is going to be to the REIT unit holders. And again, this is probably unprecedented that, inshallah, what we're looking to do here is once we sell it, is to dividend this out. So that means that our projections, which were to give a div out later, now we'll be giving a dividend out earlier. And this, of course, is going to de-risk the fund from any dilution in investor returns. And then essentially, we kind of did not go ahead with this in the current location because we felt that we have a larger location. So we want to concentrate on the larger location and make the larger location more populous, but not just resi, but with commercial as well. So we felt, why should we do 2 projects at 2 different locations and actually increase the valuation of the location of the Technology Park area? Rather, let's just take this mangrove and increase the valuation there. So what is this going to impact? It's of course going to impact on the investor IRR, and I'm sure the banks will be fairly pleased with us. Mangrove, this is our main project, our main development, which constitutes a large portion of our REIT income. That's what the master plan looks like. That's the aerial view of the master plan. Essentially, what we're looking to do here is, if you can see the shades, is office and retail. It's a small component. We've got C1, which is the technology park, which we saw, which is here. The rest are all resi. These are some of the images which have been created by a design firm, SSH, out of Dubai. And this is what it's going to look like, inshallah, when its project is underway. As you can see, we have 2 views. This is the mangrove view, and if you see behind, it's the view of the lagoon. So the lagoon view is also, so the residents have 2 views. The front residents have the mangrove view, and the residents in the back have the lagoon view. So everyone has a view of water. This is essentially, this is something which has not been done before, is to build a sustainable community. And as I mentioned earlier, and reduce the carbon footprint. What we're looking to do here is meet international standards, just like Hoshine won the gold lead or won the award, was a gold lead certified project. What we're looking to do here is something similar, and of course have a sustainable community living here. And how we do that, there are several ways we're doing that. I mean, it'll be a bit difficult to kind of explain all those initiatives, but we plan to execute these initiatives over the course of the next 12 months. The first step, just to show you that we are very serious about this, is the mangrove, is the biodiversity park. We've already launched. Took us about 1.5 years to get it done. We've cleaned the water. Place looks nice, and I'm sure once you visit, you can probably confirm the same. A question which is always asked of us is, how do you get there? So the good news is, you can even get there now very easily. Some of you know CBM. It's right, the road opposite the CBM. From DHA to here takes about, if I'm not mistaken, about 11 minutes, as you can see from the routing which we demonstrate here. There are 3 routes in addition to the current route, which we all use now. This access route 1 is what we are working on very aggressively. We hope to have this. It's actually, the route already exists. The roads are not in a great condition. So we are working to get the roads in good condition, and that reduces the traveling time from 11 minutes from Kayumba, Chorangi, or KPT interchange, or where Center Point used to be, to reduce the traveling time from, from 11 minutes to 4 minutes. So that's very significant, right? That means if you're in phase 8, you're in phase 6, or you're in phase 2, you can get here within about 15 minutes. The total built-up area of the 20 towers that we're looking to do is about 12 million square feet. The second route, which is we've spoken of as well, is the Kurangi Link Road. As you can see, when you pass there, and some of you pass there going to Kurangi, that there's lots of work happening there. Of course, there's a delay in the works, as you can evidently see. The Causeway Road, which is supposed to have completed in Jan 25, there's an apparent delay there. This link road, which I've highlighted in blue here, will be subsequent to that. So as soon as that's done, this link road will come in. Once this link road comes in, then we're looking at a bridge across from DHA, but that's the access route number 3. People keep asking us, the question, well, what happens on the road if this bridge doesn't come? This bridge doesn't come, this bridge doesn't come, right? Of course, there's certainty there, 50% certainty there, 60% certainty there. Infrastructure projects are not easy. But what we're not saying this is the Malir Expressway, right? This is like a 1.3 kilometer road. We're looking at people getting across from Kayumabad in 4 minutes. Of course, this does mean that people from defense will get across in 1 minute, right? But the land arbitrage value is very high. So last valuation, which you did in the REIT, is about 120,000 rupees square yard. Land in DHA is about 800, 900,000 rupees square yard. So there's a large difference here. But does a large difference justify the distance or the location of the project? As a developer, I would say no. People can form their own opinion. Certainly doesn't justify a difference of 1:9. So we see the valuation of land once we start doing the development, once people start coming here, that this arbitrage will of course exist because one is DHA, one is Korangi Creek. So arbitrage will be there. The difference will be there. Will it be as significant? Again, repeating at the risk of repeating myself, we believe it won't be as significant. Reason being that this is going to be a gated community, and gated communities, as we all know, when we look at the naval housing, or we look at the Air Force housing, we look at any housing, if you look at Air Force housing, for Baloch County Expressway, that's more expensive than most plots in phase 8, right? Because it's a gated, secure community. Incidentally, what we have also going for us is that we have, other than the industrial park next to us, our other neighbors is the Pakistan Air Force. So for us, that's a good thing because that means security is visibly enhanced. You've got a great hospital around the corner, got Lindus Hospital, we've got schools, we've got colleges, we've got CBM, we've got Salim Habib University. So all the tick boxes as far as infrastructure, as far as networks, as far as schooling, as far as hospital, all exist here. So we're not looking at a site out of Karachi, 1.5 hours away, looking at a site which is 4 minutes, from Kayumabad. This again was the first, and this was a passion of the group. It's Pakistan's first biodiversity park, Karachi's first, but I'm assuming it's Pakistan's as well because I don't think there are any mangroves in KPK. Similarly, what we've done here over a period of time is build large walkways. This is a public space. We're looking at launching this at the end of December. It is not managed by TPL. It's managed by an independent board of governors who are in process of being appointed. And they'll be running this with funds, of course, from the group. But we're also looking at other donors so that we can expand this, because at the end of the day, it's for the citizens of Karachi. And it's a gift from the company to the citizens of Karachi. So it'll be free public space. You can go there, you can relax, you can watch things, you can watch the birds go by, and you can actually see what a mangrove tree or a mangrove plant looks like. You can actually touch it as well. I'm just going to play a brief video. Right. This is what the office looks like. That's the sales office. The sales office is being the park is on the left. The sales office is on the right. That's being launched day after tomorrow on Saturday. And that's the first step. And that's the first step towards the project launch. The project launch, inshallah, I'm looking at sometime in January. So we've done all the work to get us to a stage where we feel the environment is never perfect, but it's a great time to actually launch this project. These are some of the developments. This is what the area looked like before we came in. This is what the area looks like now. This is what the roads look like. That's the actual images of the roads. And these are AI generated images of some of the public facilities we'll be building here. These are paddle courts and futsal courts, and these will all be ready by April, inshallah. I'll pass it to my colleague Jamil to discuss what else we're doing around the neighborhood, around the region, and then also talk about some of our other initiatives.
Yeah, hi everyone. So at the UAE level, TPL Investment Management, which is a subsidiary of TPL REIT Management, is working on a project. We've called it Everest. It's basically a hospitality project in the Maldives. We're developing a 48 villa resort. We will have an additional 6 villas that we will sell. The master plan has been done. The concept design is complete. We're under regulatory approvals, and we're looking to launch the villas over the winter. This is about $130 million project with an estimated 25% USD IRR. The project is basically branded K2. K2 is a niche brand in the Alps. They're famous in the ski region of France. They do ultra high net worth guests. They have royalties, celebrities coming to them over the 4 or 5 months of the ski season. And so this is their first venture that we're taking them out to the Maldives. Where on the success of this, we will be hoping to take them into other regions, other summer regions and other destinations as well. Partnering with us in this is a Sri Lankan developer that has also worked in Maldives, Zanzibar, and Sri Lanka as well. So together as a consortium with a family office out of GCC, which is anchoring the investment, we're hoping to see this project live in about 2.5 years from now. Also at the, so this is a first project. Also at the UAE level, we're looking at further using this as a seed to a larger hospitality fund. There are a number of assets, fairly fragmented industry, the resort industry across Asia, East Africa, and the GCC. And we're working with a number of opportunities and asset owners to bring them under the ADGM fund platform. So we are a fund manager. We have the license in ADGM. And so by setting up this platform where asset owners can bring their funds and large investors can come on board, we will be looking at making income through fees and carry on a number of transactions. So that also is in the pipeline along with this specific project that is already under execution. Back to you, Ali.
Yeah, I will ask Sajid Farooqi to present this data center.
So the data center across the world, the data center is being parked under the REIT infrastructure. So the whole idea is to build a digital REIT infrastructure under the ambit of TPL Properties. And we have been engaged with Gul Ahmed Group to partner with us to develop a 4 megawatt data center in outskirts of Karachi. The idea is to make it a renewable and to primarily use wind energy as a primary source of the power, and to pass on the arbitrage of the power cost to the end users. So currently, okay, the average per unit cost is around 100, including the impact of diesel, depending upon the load shedding. But after the completion of this particular project, we will be offering power at a price of around 30 to 35. The project is now it's now from the drawing board stages to the initial feasibility studies. We have identified the land. There are two parcels of the lands have been identified in the outskirts of Karachi. And what we are right now doing is to evaluate the appropriateness of both sides in terms of the power generation and other tests relating to the data centers. Yeah. So this is just pictures of some sites. We are trying to build the data center.
So what else we're trying to do here is also looking to launch another REIT fund shortly, given the fact that we've done a lot of work in this area. When this area came, if you recall, this land was parked in TPL Properties. I think we bought it at about 17,000 square yard, transferred the at 32, and we valued current valuation master plan is about 120. So we feel that given the fact that we've given a lot of work, that we've done a lot of work in this area, we feel that we should start another REIT fund for this area, get more land here. There isn't too much land available, but we feel that if you're developing the area and the infrastructure around it, then it just makes sense to acquire more land and where we are just the REIT managers and we have a carry. So this is just it's a 1.5% NAV. We have performance. We have 25% of carry. That's the carry based on a certain price change. The dividend payout will be 90%. That's the rate. That's the requirement for REIT funds for taxation purposes. On the financial performance evaluation, I will pass it on to Adnan, who can walk us through that.
Right. Thank you very much. You all must be aware of the financial result of the company for the year ended June 30, 2024, and must also be surprised that the company posted a loss in the current year. There is a reason for posting a loss, and that is the reason we are here to explain you in detail why this loss has been posted. Basically, TPL Properties is a holdco, and we have a major investment in TPL REIT units, which is 38% of the total fund. So during the year, the REIT fund issued 337.5 million units to its unit holder to draw down the third tranche. So according to the agreements which they had with the anchor investor, those units were to be issued at par value instead of the NAV. That led to the dilution of the NAV, which we were using for recording the performance of the NAV. So the other reason was that during the year in May 2024, the fund got listed on PSX, and then that led to the change in the valuation method, which is being prescribed in the accounting standard from level 3 to level 1. Now, what is level 3? Level 3 is the method which is used to value the unquoted investments by the company. And level 1 is the quoted investment value, which the company uses for valuation. So after the listing of the REIT units, the company had to value its investment on the closing price at the period end, that is June 30, 2024, or whatever was available at the PSX. So that closing price was 15 rupees, and the opening value or the opening value for the year was 19.39, which forced us to post an loss, which is an unrealized loss, or in other words, to mark our investments to the market value For that purpose, the loss has been recognized in the year 2024. We shall be continuing to use the same accounting method in the current financial year as well. So whatever the improvement in the pricing of REIT units will also improve the profitability which of the company in the coming financial years on a quarter-to-quarter basis. And that is the only reason why we have posted such a significant loss. In the preceding year, in 2023, there was a profit of 5.2 billion. Admit. That was also on the gain which the REIT fund recognized during the year, and that was also an unrealized gain. And there was a portion of 887 million, which were 875 million, which was pertaining to the realized gain on the sale of one of the SPVs to the REIT fund in the preceding year. Administrative expenses were lower as compared to the last year, and the major reason was that we reduced our payroll bills during the year. The legal expenses were lower as compared to the last year because there were some issuance charges in the preceding year against the bonus issuance which the company declared. Finance cost was in line with the borrowings which the company has made. Other income, again, this has a reversal of some unpaid bonuses which we reversed during the year, and the markups which we against the borrowings which against the lendings which we have done to our subsidiaries. So consequently, for the year, the company declared a loss per share of 6.47 against EPS of 7.5 in the preceding year. Moving on to the consolidated financial statement, the results are mostly similar to what we just spoke about in the standalone financial statement, because the group has 100% stake in TPL RMC, TPL Developments, and TPL Property Management. The loss gets diluted with the revenues which the other entities earn in the group. If we talk about TPL RMC, they earned 629 million revenue as compared to 1052 million revenue in the preceding year. This was because of the good management fee. However, the performance fee was lower during the year, and because there were lower valuation gains. TPL Developments posted an 119% gain as compared to the preceding year. And TPL Property Management, this is a facility management services which we provide to for one of the buildings. This is a fixed price contract, so the revenue remains the same. The major objective of providing this breakdown is to give and demonstrate the basic reason how the loss is being covered, and to distinguish the realized revenue with the unrealized losses. Coming on to the administrative expenses, again, they were 34% lower as compared to the preceding year. Major reason is the lower salary and payroll bills. Finance costs, again, the major borrower is TPL Properties, and we just spoke that it is in line with the borrowings done by the company. Other income is the income which is being recorded on the lendings done by the group to the other companies other than the group companies. Consequently, the loss for the year was 4 billion, translating into a loss per share of 7.1 as compared to an EPS of 5.18. Right. That was all on the financial statements of the company for the year, standalone and consolidated. I will pass on to Faraz for explaining the last slide on the valuation.
So, right, as you can see, this is to clearly reflect upon the potential of this stock, and the reflection is through the relative multiple basis, price to book basis. And as you can see, the current share price is hovering around 10 rupees per share. And the book value per share is around 17 or 18 rupees per share. So, and we have an ROI of nearly around 70%. And comparing it to the regional comparables, we have a price to book multiple of averaging around 2.01. So that reflects upon the fact that this stock has the potential to go around 35.7 rupees per share, which is currently 3.6 times of what it is trading right now. And based on the cash flow projections and the discounted cash flow and the intrinsic value that we came up based on our projected cash flows, using some of the part methods, we project that our price based on the discounted price, this per share has a value of nearly around 45 rupees per share. So this clearly reflects upon the fact that this has quite upside potential and is currently very undervalued. That's about it.
Fawad, can you please give screen sharing rights to Mr. Rizwan Kareem appearing in the list? So we want to play a small video.
Sure, sir. Let me just find him.
Thank you.
Right, Fawad, now we can have the question and answer session. So if there are any, we are happy to answer the questions.
Hey everyone, the presentation from the management's end is complete. If you have any questions, you can raise your hands or you can ask in the chat box.
Firstly, I would just like to add one more thing. This is all very exciting from our perspective, but I think it might be a good idea if anybody wishes to see what we've done on the ground. More than happy that just drop in at any point in time. You can coordinate with KSB. We can I'll defer to KSB how they wish to do this. and K-Trade and how they do this, whether it's just an event or they can do it at certain times. I'll leave it to them to organize this. But it's a site, it's a park, and everybody's welcome. All are welcome. I'll answer that. That's from Abdul Razak. I'm assuming to me means I don't know who. Look, I'm highly uncomfortable commenting on the share price, right? As management, I feel that it's our job to tell you what we're doing, and then the market has to discover the price based on what we're doing. The only reason we gave the regional pairs was just to give things in perspective. That's like when we say Pakistan P is 5, and then we say regional pairs are 10, 12, 14, 16. That's the only reason we had the slide. So at no point are we suggesting that 11 rupees is a good price, or 10 is a good price, or 60 is a good price. So just to make that clear, I think market should discover what the price is. Market should see what we are capable of developing and price us accordingly.
I don't see any raised hands right now, so I'll just take this opportunity to ask a few questions of my own. Um, Given the easing cycle that we are in right now, going forward, financing is becoming pretty cheap. The interest rates are expected to hit single digits next year. So, what's your view on that? How does it impact the company?
Look, interest rates, we all know this, it's not a secret. They're heading to single digits. I think the base rate is no longer reflective, CIBOR is more reflective, and then we have these inflation numbers coming in. Of course, the sector has, the property sector and everything related to the property sector has gone through a fairly rough period over the course of the last 3 years. Assuming there are no other supply side shocks again, from what I know and what I'm in the market, I speak to other fellow developers. I see a significant amount of stock coming in. I see a significant amount of demand. I still feel that recovery is on its way, assuming there are no other shocks, and I keep repeating that. But I feel that it's going to take some time. It won't be as quick as we think. Of course, property and other things are functions also of disposable income, and disposable income is also reduced for a lot of people. The market we're catering to here is a middle income market, and we feel that there's significant demand, and what we're trying to create here is not the most expensive product or the cheapest product. We are trying to create the best product for this price range, and that's like excuse the cliche, that's our USP, or that's our motto, or that's what we aim to achieve. But I feel that there is significant demand for gated, secure communities which are sustainable. It's something which has not been done. It's not something which is risky, I feel. I think it's relatively less risky than just doing a single project, which could just have bad neighbors, right? So we kind of control the neighborhood, which kind of pays the premium.
Right. Thank you. And
Presentation will be available on the website to answer the question.
right. Also, I believe there has been significant cost escalation, particularly on the material side over the past year and a half. And what's your take on that? Are there any contingencies, or you're just going to pass on?
So look, so what we did, and we didn't get too much flack for it because we didn't have any leveraging. So what we did as a conscious decision is not to launch anything when the prices were off, right? Or when we were going through the supply side shocks, whether it was steel, whether it was cement, whether it was the rupee. So we didn't launch anything, right? So there was nothing we sold at a dollar valuation of 170, and then we caught on the wrong side at 270. So when we started our sales, we were at pretty much the same exchange rate. So as far as that is concerned, we are okay. Of course, if exchange rate goes beyond more than a 10% change, then there will be some impact in costs, which we have budgeted some contingencies. But we were not on the wrong side of the supply side shocks, which happened pre pre last year, right? So we're 2 years ago.
Right. The company, as of now, has multiple projects going on, and given the situation right now, cost escalation and the easing cycle, uh, in terms of completion, what percentage levels would you assign to each project that's running right now?
Sorry, what percentage levels?
I mean, how much of the projects are completed?
So look, as far as Hoshang is completed, Rizwan, we are what percent completion?
39%.
39% project completion? Or of 39% project completion?
Structure.
Structure completion. So 39% structure completion on Hoshang. On Mangrove, as we showed earlier, we've done the design phase, we've done the schematic phase, we've done the pile load testing, we're getting the grounds ready. Of course, the site office is ready. So we would I can't say zero, but something which took us a year to do because infrastructure is a big component, right? Because without infrastructure, you can't do anything. So we maybe at a level of maybe 15%, 15% on Mangrove. And IT Park is concerned, we are 99% there as far as the sale is concerned. 99% there, of course, because we have to take consent from our REIT shareholders, and I believe consents are forthcoming very shortly. As soon as therefore we get them, we'll let the market know, and then we hope to kind of unwind the whole thing by the end of June, right? Before the end of June, so that we can pass on some of the benefit to shareholders. I think I just answered Murad's question there.
Right. We have another question from Mr. Hashim Yazdani. It says, considering construction work is underway on one Hoshang, has the company managed to sale/book apartments units as of yet?
Yes, we booked. So what we're doing is because we are booking apartments, we are only releasing certain amount of inventory. So we're not releasing like there are 32 apartments. So we're not releasing 32 apartments. We're doing it in blocks of 6 and 7. So the next lot we'll be launching on December 7th. So December 7th is when we launch the next 6 apartments.
Right. Okay. And I was also wondering, sir, given the almost completion of the technology park and government's focus on IT exports and everything, how does that mesh into your overall plan?
Look, so there are 2 challenges there, right? So one, there was an opportunistic good thing which came up. So we bought the land, we made money on it, and we sold it, and nobody else makes money on it, right? So that's the good part. The not so good part was this: we didn't buy the land to flip it. We bought the land to make a technology park. Unfortunately, at 24% interest rates, and because it's a technology park, you can't really sell space; you have to lease space. That means you need some level of debt to actually construct the park. We found it's not sustainable at 24% to build something and then hope for the best. So hence we sold this. But the good news is that we're continuing with the technology park. As a matter of fact, based on the numbers we've just finalized, it's going to be larger than before. And of course, with interest rates coming down, ability to finance is of course there, but the rates at the current levels, and we enter into some fixed rate, would make the whole technology park feasible.
Okay, we have
Let me answer that. Sorry. No, you can't. You can't use. Sorry.
Sorry. We have a raised hand from Mr. Al Rayyan. I'm just going to ask him to unmute himself and ask his question. Al Rayyan, can you please ask your question?
कर रहा हूँ सर। जमील भाई कैसे हैं आप? ठीक है, खैरियत से हैं?
जी बिल्कुल।
हेलो।
जी आवाज आ रही है।
सबसे पहले तो प्रेजेंटेशन बहुत शानदार थी आपकी और बहुत मुबारक हो आपको, और आपने बहुत ही डिफाइन के साथ बताया, हर चीज को आपने क्लियर करके बताया। हम होपफुल है कि कंपनी इस तरह ग्रो करेगी, लेकिन थोड़ी सी एक कोना है, वो जो है आपका इंटरेस्ट रेट, उसने काफी हिट किया प्रॉफिटेबिलिटी को, तो उसको थोड़ा सा चेक करें प्लीज, ये हमारी गुजारिश है। बाकी प्रेजेंटेशन के लिए आप बहुत मुबारक हो। थैंक यू।
Can I answer these things from Mr. Abdul Razak? So actually on the land proceeds, Aliaskar, if you can take that and take the next two.
So proceeds from the land could be used to buy market. No, so land is parked under an SPV under the REIT fund. So as soon as we consummate the land sale transaction, we'll wind up the SPV. Funds will go to REIT fund, and REIT fund will dividend it out to all the shareholder. And TPL Properties is one of the strategic shareholder holding around 38%. So that's what the flow of funds would be. What is the land size? So land size of the IT park is 10,000 square yard, which we are selling right now.
Okay, I think some of the questions are coming directly to you. I don't have any questions on my chat box right now. And we've done about 50 minutes of the presentation. There's another question from Mr. Arib Mirza. Did they sell the technology park? Can you put some clarity on it?
So we have received the firm offer. We are just in the process of getting our shareholder consent for the same. And we are expecting it will be with us within next 2 weeks. So at that point in time, we'll be in the position to sign the same with the potential buyer and announcing it to the market as well.
Adnan Saab, do you have any questions on your side?
No, nothing is received directly here.
Okay, I think
Yeah.
I also don't have any questions right now. So I believe we've done almost
I
enough.
have one question. Can we, it's a suggestion. I'd offered that we'd be more than happy to show the site to anybody who wishes to visit, run them through it. So I would request, it's a request actually, not a question, if you can somehow mobilize that at some level. People can come in, investor open day or something we can do, so people can actually see what we're up to.
Right, sir. I'll get in touch with Mr. Adnan. I'll set up a visit, and we'll invite the community also to come see the
Yeah, because
investor
it's
community.
what we've done, I think, I've not seen this. I've seen public spaces across the world, and the corporate sector plays a very large role. And we feel, and I think you cannot, I mean, I don't know if any of you saw this, right? In the mangrove presentation or the mangrove video that we played, I think some of you may have noticed those two large towers there. Those are the AKT towers, right? And that's a video from our land, right? From the land which is right at the edge. It's 1.2 kilometers from there. So people have this view that we don't know where this is. Do we need, what sort of public transport do we need? How far is it? I think that just puts things in perspective as to how far it is. And if you're looking at Imar, which is on the beach, it's there. You've seen the value of Imar. You've seen the scale of Imar. Just to put things in perspective again, apologies for repeating this, but in the event that we are successful in getting the land close to us on the neighborhood, so Imar is close to about, Jamil, about 70 acres?
70 acres.
70 acres. So we are already at 40. With our neighbors who are working with us, that's another 12. So we are about 52. And if we can manage another 50, we're about 100 acres, right? 100 acres in the middle of the city is a big number, right?
On the waterfront.
On the waterfront, right? Now, and then let me ask you one more question, right? I don't know what the share price today is, but let's assume what it was yesterday. And we own 40% of the REIT. And the REIT has 40, let's assume there's nothing else in the REIT, right? There's no Maldives, there's no data center, there's nothing there. Is that land, and we own 40% REIT, so is that land worth, 5 billion rupees? I think that's the market cap today. So I'm saying, is the company worth, for 40% of the REIT, which includes 40 acres of this land, includes everything else in it, is it worth 4 billion rupees or 5 billion rupees? I don't know. I think that's the question. If somebody asks me, I won't have the answer. So that's why I'm throwing the question back.
Right. Again, yes, it's a good notion to ponder on. And obviously, everyone will have their own views. Uh, and if anyone has more questions, they can reach out to us or the management, and we'd be happy to entertain them. In any case, as suggested by you, sir, we'll try and set up something, and whatever develops, we'll intimate to the respective investors as well. In the meantime, I believe we've already hit the 55-minute mark, and in the interest of time, I feel that we're just going to close this session right now. Thank you, everyone, for joining us. Mr. Ali, if you have any closing remarks that you'd like to close with, apart from this, which is quite clear.
That was my closing remark. That was my closing remark.
All right, sir. Thank you so much for your time, and thank you, everyone, for joining us. We'll join you next time around. Thank you.
Thank you very much. Thank you.